I am now joined by two former administration officials. Douglas Holtz-Eakin is president of the American Action Forum. He also served as chief economist to the President's Council of Economic Advisors under President George H.W. Bush. And we're joined by Karen Mills, former administrator of the Small Business Administration under President Obama. It's great to have both of your perspectives on this day. Doug, let me begin with you, if I may. These new jobless claims, 3 million more people filing for benefits. The 7-week total now a staggering 33 million Americans, which comes out to 1 in 5 working Americans, as I said earlier. What's your take on these numbers and what it might mean for policymakers in Washington?
Well, as Stephanie said, this is not unexpected. We could see this coming, and tomorrow's job report is going to show 21 million people lost their jobs in the month of April. And we don't know where they'll go. They could show up as unemployed, in which case we'll have an unemployment rate that's over 17%, or they may show up as just having given up and be out of the labor force, in which case labor force participation will plummet to about 54%. So, you know, we knew that, and we knew that it was important as a matter of policy to provide enormous amounts of liquidity to the economy to get it through the lockdown. But now comes the hard part. There has to be an opening where appropriate. There can be no let-up on the public health mission, which is the most important economic policy. You have to provide the combination of testing, therapeutics, and vaccines to give people the security to go and engage in commerce. And there will be some targeted assistance that will be necessary to sort of help those parts of the economy that are struggling. So now comes the hard part. We knew what to do to shut it down. Now you have to be a little more nimble to get it going.
Karen, you were on the ground floor of the response to the last major economic crisis that was remotely similar to this, not completely the same, but still a devastating recession in its own right. You point out that more than half of the job losses so far have been involved in small businesses. Do you think that the PPP loans that have gone out will actually help stop the bleeding?
Well, thank goodness I'm hearing right now that some of the small businesses are getting their money from the PPP loans, particularly the smallest of the small ones. But you know what? That was only meant to cover 8 weeks. And this is going to go on a lot longer than 8 weeks. So even though it's a lot of money and probably 5 million small businesses will get some money, we really need this next round to have a whole set of other things for small businesses as they open. Relief in any debt that they have to pay, relief on some of their rental payments. We are going to see big job losses tomorrow, and it's going to be more than half in small businesses, and they are going to be the hardest to get back.
Let me ask you really quickly, Karen, if you're handing out these PPP loans, is the strategy better to go for the really small businesses, like let's say a cafe that employs a handful of people, or do you go for the slightly more mid-sized companies that have maybe 100 employees or so as a strategy to get that money doled out? What do you think is going to have the long-term impact that you desire in recovery?
It's the most important to get it to the smallest businesses, and the reason is they are the most vulnerable. The purpose of the PPP money is to get money into the hands of the employees of the most vulnerable businesses, because what if they shut down? And we know we've got 30 million small businesses. Most of them are small. They have nowhere else to turn. And on our most underserved communities, if they shut down, how are those people going to get reemployed? How are those businesses going to start up? What we saw in the last recession is when businesses shut, it takes at least 6 months in a good time to get them started, to have a new entrepreneur, have them get some money, have them hire some people. So the idea, if we want some kind of U-shaped recovery, is keep these folks afloat.
Yeah, very important point.
And that's why you have to go to the smallest and the most vulnerable. I would put $100 billion more into loans under $50,000. I think that's the place where you could really do a lot of good right now.
All right, Doug, let me ask you really quickly about Neel Kashkari, president of the Federal Reserve Bank of Minneapolis, saying today on the Today Show this. Watch.
I'm optimistic. I don't think we're actually headed for another Great Depression, because part of the reason the Great Depression was as bad as it was that policymakers in the 1930s did the wrong thing. They did things that made it worse, and I think we've learned from that, and you're seeing bold action by Congress to support American workers. The Federal Reserve is acting very aggressively. We will continue to act aggressively.
Reading a little bit between the lines, it sounds that he's saying the fundamentals of the economy are okay so long as the policymakers show up to work. Is he right? How long do you expect this downturn to last?
So I think he is right. One of the things the Federal Reserve did, and did a spectacular job at, was keeping the impact of the pandemic on the small businesses that we've seen, the airlines and then the hotels and all of those Main Street economies. It kept it from turning into a financial crisis. So we actually have functioning financial markets. People will be able to get loans from banks. Investors can invest in the new businesses that will start up in the aftermath of this. That's an enormously successful effort. As we've seen, Congress has moved quickly and on a large scale. That's completely opposite to what happened in the Great Depression. And that's the reason you see most forecasters saying that we will return to growth in the third quarter, fourth at the latest. And that growth may not be spectacular. My guess is there will be continued efforts to improve the quality of life. But that's not the Great Depression, which went on for years and years.
All right, Karen Mills, Douglas Holtz-Eakin, thank you both for joining us this hour. I appreciate your insights as always.
Thank you.
Still